1% Bank of Canada, 1% increase to the overnight rate. You surpassed our expectations. We were expecting 0.75 and I mean, it's another surprise. And I'm getting calls left and right by clients. What's gonna happen? Is this a doomsday situation? Perhaps, perhaps not. We'll cover everything in terms of how you guys can strategize with your mortgages, what's going to happen with the housing market in Ottawa, and much more in this episode of Market Track with Abuzar. As always, please remember to subscribe to my YouTube channel and to like this video. So let's get going. Alright, so first of all, go in front of the mirror and keep repeating this to yourselves. Ottawa is not Vancouver and Toronto. We're completely different city than those two, and the way the prices over there fluctuates, it has nothing to do with Ottawa. Every city has its own dynamic. Remember that. I keep saying that to yourself. Now, the reason is we're very strong in terms of the government-based jobs. That's very important. We still have a lot of military relocation happening, so that's a flow that's continuous, as well as a strong high-tech sector, which is basically branched off into various fields. So as far as the job security goes, from what I'm seeing is that our market and our situation is very different from Vancouver and Toronto. And as you see, all the fear-mongering and all the news that's coming out is from, if you read the reporters, they're pretty much in Toronto and Vancouver. Now, even in those news reportings, what you see is 45% drop in sales, 35% drop in sales. Now, then you get into that, reading the whole piece, and what it comes down to is, oh yeah, we got a drop of 4.5% in terms of the prices. So that tells you what? The sellers aren't willing to drop. Not all or every seller is desperate enough to sell the property, and that's something that you should remember. And we're not in a full recession situation or a collapse. Now, looking at why they are actually increasing the interest overnight rate, which is impacting the prime and so on. Now we'll get into that. The reason is not necessarily your affordability for the sake of the housing market. I mean, they come out and give it a spin. This is the cause, oh, we want people to afford housing. This has nothing to do with housing. If housing was an issue for them, they would have done something much long ago, a few years back. I mean, this is not an objective. Right now, it's to control the inflation and to basically the purchase costs and the daily living costs of Canadians. And that's what it's basically the focus is on. And I tell you why. When the prices have gone up, giving you a townhouse example, up to a 700 range, okay? With these interest rates that I keep going up, with fixed rate being at 5%, and now you're looking at the variable without the discount per se, a mortgage at around 4.7%. You're not able to afford as a new buyer, a new homeowner, right? Unless those prices, that 700 range, okay, somehow miraculously cuts in half to make up for the mortgage increase that you're paying. So really, people cannot afford homes with these sort of interest rate increases, and I don't see the home prices collapsing to a point of 50% for these individuals. So the affordability, the housing crisis, or people or young youth or new home buyers or overall people, being the objective or the main cause and reason for the government doing this is I don't buy it. I don't buy it at all. This is just a reactionary movement, which is too late, I believe. Many countries started bumping up their overnight rates months ago. I believe this is more of a defensive move instead of being proactive. We're basically responding to a situation which has surprised us and getting out of hand, and they will continue this until they get some sort of a control over this. Which brings us to the question of, okay, how much? Right now we've increased to the overnight rate to 2.5%. which means that with all the borrowing costs that banks have, right now the variable rates that the banks are offering is about 4.7%. Now, how high will this go? They're aiming perhaps, if the economy will take it, which is, I don't know, to go up another full percent. So basically you'll be looking at right around the ballpark of, for variable, 5.7%. Now remember, this is without the bank discounts, because normally this is the advertised rate, but what they'll offer you is with a discount. And normally you have somewhere between the ballpark of 0.6 to 0.9% discount with banks. So still looking at the whole situation, perhaps variable would be the best way to go. Or there's a possibility that the fixed rates, as I mentioned in my previous videos, due to the lack of volume between banks, they will start introducing more attractive fixed rates and they will drop the rate. So it's really interesting to see what's to come in the next few months. But should you be going in a panic mode? Not necessarily. They are correct. I agree with them. There's a small portion of borrowers right now on variable, okay? And if you did variable on a high amount, that wasn't the best move, really. If you have a mortgage of $1 million plus and you really went on variable, that wasn't, I mean, that had nothing to do with Bank of Canada. That had nothing, I mean, this is something that you should have thought of. I mean, this is free money that was giving out up to this point because of the pandemic. I mean, the overall, looking at the trend of mortgage percentages, it's hit in these ranges that we're looking at. I mean, what you were dealing with previously is unheard of. So if you had an option of fixing for a large amount of money, this is what you should have done instead of going with variable. That's something that's on pretty much on the borrower and on you, not necessarily on the situation right now. So that's my take on it. No, not necessarily. You shouldn't be panicking. I think even with these gradual increases, it's not gonna mainly impact your cash flow. You always have an option of fixing that, fixing into a fixed mortgage. But so far, variable is the best option to go. And I'm thinking we'll get to a point where they really have to be careful in terms of how much they're going to increase this overnight rate, because again, you don't want any sort of a deflation happening, and that's basically the full-on recession that they have to avoid. And I don't even want to get into that foreign investment banning, which they started first banning the foreign investors, which they were bringing assets and cash mostly into the country. That was banned, and then now they're hiking up the interest rate, which basically domestically people aren't purchasing as much. So now the whole cash flow is another interesting move that I don't even know if they think about these things, honestly. And it just historically we see how with the CMHC mortgage insurance, which they bumped up the premium, they lost all those buyers. That's a lost revenue for Canada or the Canadian government, which will never be regained. That was done. And again, I'm not an economist. They know what they're doing. So let's get going. Let's take a look at the numbers. We'll take a look at the whole of Ottawa and the surrounding, and then we'll get more specific into what's happening. And I'll reiterate what I said before. Yes, the number of sales have reduced, and we'll see how the numbers, or what the numbers say as far as the situation goes. Number of sales, residential freehold, 2022, 1138, whereas last year we had 1,639. Look at the drop. That's a drop of almost 31% in number of sales. Now, looking at the average sale, we are still much higher than last year. 773,000 in 2022 versus 726,000 in 2021. That's still an increase of 6.4% or difference. And the average days a home sits on the market. That should be another signal in terms of what the market is doing. we're looking at 2022 15 days and 2021 11 days. So really, it is a 31% difference, but not a lot of days. Looking at the condominium market, number of sales in 2022, 370 units versus 2021, 483. You're looking at a drop of 23%. And looking at the average price, it's closer than the year before, but still higher, 439,000 approximately for 2022 versus 2021, 435,000. That's about a 0.8%, but not as drastic as being reported in the news. Looking at the average days for condominiums, 2022 15 days versus 14 days. So a day difference, a 1.4% change in the average days on the market. So again, we are seeing changes. The market is changing, but should we panic? Should we go in that shock, depression mode? I really don't see that. You gotta take your time and remember, volatility is opportunity, right? Right now, the best form of investment is in this sort of a market. You know, it's easy for you to start buying investment properties in a hot housing market. I mean, I personally, that's not in essence, that's not a form of investment. You know, these are the markets. These are the markets that you should take advantage of to invest. You know, the uncertainty is opportunity. So that said, looking at the specifically residential within the Ottawa central areas, the list price versus sold price, and look at the difference, the jump, the shot up in the number of inventory and listings. We have 1,486 active listings versus 779 sold units, and it's interesting because we see this huge gap, yet it's not impacting the average price per se as much as you would think it may. Okay, looking at the previous year, completely different. We had 1,151 sold unit versus 1,017 active listings. Looking at the residential freehold ratio of sold versus list, you're at about asking. So the average prices have gone up. They are being fluctuated. We're still not seeing those days of multiple offers, but the average has gone up, and we're at about 100% or asking versus 107% of 107% last year this time. Okay. Looking at the average, and this is basically the average sold price is key to look at. And for the month of June, you're looking at an average price of 832,000 approximately versus last year, which was 794. So we're significantly higher than last year, and not a significant drop from what we had a few months ago. Of course, it's not March, but it's not a drastic, upset as far as it goes, in my opinion, compared to how much the prices have increased in the past 2 years, right? The drastic increase of prices, that was shocking. This is gradual, in my opinion. Okay, looking at the residential freehold days on the market. So a home sits on the market in June about 13 days approximately on average to sell versus 10 days in the previous year. Look at the condominium market. Now, we have more inventory. We had 592 in 2022 in June active listings versus 352 sold units, and last year we had 502 versus active listings versus 466 sold units. And looking at the ratio of sold versus list, you're pretty much very similar to residential asking. So close to asking is what the story is, and that's for the month of June versus 102%. So not a drastic change as far as it goes. Now again, let's take a look at the average sold price for the month of June of this year, $443,000 versus last year, which was lower, $439,000. And again, we have dropped, not to say we have not in terms of average, but again, I believe it's something that is gradual, and we are facing a balanced market as far as it goes. Looking at the days on the market for a unit that sits on the market pretty much on average to sell, 14 days this year versus 15 days. So not a lot of change as far as it goes. We actually have reduced compared to last February, which was about almost a month for a home or a condominium unit to sell. And again, this all depends on the location, the availability of units, where that condominium is situated, if it's in a building, whether it's in the 17th floor or on the 3rd floor. I mean, those all will make an impact on how a unit sells. Looking at the rental market now, this is interesting because a lot of pressure is being put on the borrowing side of things, and how is this gonna reflect on the rentals? And as I predicted, pretty much we're getting into a situation where demand is getting more for rentals. And looking at the list versus sold or rented, really, in the rental market, 589 active listings in June versus 588. So we're basically evened out, this shows me demand for rentals. And again, because of what's been happening, yes, you are getting pressured for the borrowing, uncertainty, but if there's an investment to be made, then we're seeing that the rentals are basically there's a quick turnaround as to what is going on, and the days and rental market on average sits on the market. You're looking at about 22 days for this June, and 21 days. So not a lot is changing with the number of days a unit rents, but there's more demand for rental units and the rental market. And this is bound to continue, I believe, into the coming months and years. So look out for overall rental increases per month, and looking at the allowance of the government allowing us to our landlords to increase the rental percentages, annual increases. You're looking at a higher percentages for the years to come in 2023. So that's that. If you guys have any questions, please feel free to reach out to me. As always, please remember to subscribe to my YouTube channel and like this video. I'm always available if you need any sort of tips, if you need to strategize as to what to do with this market. I do not believe you should be panicked. I do not believe that you should be depressed about the situation. It is a depressing whole with the war, with the stock market and everything. But again, we will get through this. I think it's just we're in a transitional phase. COVID was a lot to come out of, and now we're facing another, like a war happening. So that is really impacting gas and oil prices, and overall market is a bit uncertain. But if you are into making investments, this is the ideal moment, because many took advantage of the volatile market in the US, down the States, and during the 2008 crisis, and they came out significantly benefiting from the situation, if you are in that position to do so. And I'm always available to chat with you guys over a cup of coffee, over the phone, text, email. Feel free. Alright guys, until the next episode, we'll see you soon. Take care.